All right, let's head straight to the markets now. Let's get a check on what's happening in Africa. We see for the African continent, we see the NGX with a pullback right there, 0.01%. Marginal pullback in South Africa, 0.14% down. Then we see other markets we track in Africa. We see the Nairobi Stock Exchange, and that's Egypt in North Africa. Let's get a check on what's happening in other parts. But we're still seeing 98,000 points. That's for the NGX. Let's look at North Africa now. Let's see what's happening. EGX 30, 0.35%. The Nairobi Stock Exchange, 114 points maintained. That's for yesterday's close, 0.11%. So it's not looking so bad. There's a mixed picture right there on the African continent. But let's speak to Damilare Ashimi, who's a macro strategist at AfriInvest. Hello, Damilare.
And to all our viewers across the globe.
Yeah, fantastic. It's great to have you. So it's all about what's playing out in Washington right now with the IMF and the World Bank annual meetings. A lot of projections are coming out of that meeting. We see the IMF there forecasting Nigeria's economy to drop to the fourth largest in Africa. If you look at what they put up there, we see at the top. If you put that up for me with the projections there from IMF, if you look at the top there, we'll see a country like South Africa, that's $373 billion. That's the projection. Egypt is coming in second place, $348 billion. Algeria, beating Nigeria there, $267 billion. That's the projection. That's what IMF is forecasting with the GDP for this year. So definitely, we have a target of being a $1 trillion economy, Damilare. How are you seeing these projections by the IMF?
Well, I think the projection in terms of what Nigeria's GDP number would read at the end of the year is a reflection of the dynamics that have played out in the Nigerian economy over the last 16, 17 months, which, if you look at it, it's actually not very bad that we are implementing reforms. But what is then missing is the fact that there are some complementary measures that should have come with the reform, which will have saved the economy the economic side from collapsing like this. Looking back just 2 years ago in 2022, Nigeria GDP size in dollar terms was in the range of about $480 billion. And just within the space of 1 year, we've lost more than half of that, thanks to the massive devaluation of the FX rate. You recall that last year, before the new administration came in and began its reform, the exchange rate was in the region of 480 and so on. But just because of the devaluation that occurred last year, I think the exchange rate, the official rate ended the year around 907. That alone took the GDP by half. Now, like I said, it is not because the reform agenda is not good, but again, it's because some of the measures that should have come with the reform, for instance, at a time when an economy is going through a major reform like that of liberalizing the FX market, removing energy subsidies, there are also supposed to be provisions for cushioning strategies or cushioning programs that would then ensure that the purchasing power of ability of household to consume does not drop radically. And because these measures were not put in place, perhaps because we also lack structure that can evenly distribute resources, because most times you hear the government come up with cases of palliative, sharing rights, sharing this. But in the reality, most of these, first, those are not the kind of palliative the country needs to keep people's purchasing power up. Even with that, the sharing pattern of those ones are also not ideal. So by and large, the GDP number the IMF is forecasting to us is not really very surprising. I mean, we have issued a number of reports between the beginning of the year and now to explain why we think that we might actually have an extended period of challenge in terms of resuscitating the economy. So this is more of a reflection of what has happened to the exchange rate. Between May last year and now, the exchange rate has lost about 80% from about 481 to $1 to currently 1,601 to $1. So that is massive, and that will tell on GDP. And when you then look at the prospect for growth, the prospect for growth or the projection for growth too is not so very buoyant. at the beginning of the year, we have actually maintained that growth this year in a base case will not exceed 3%. I mean, when the IMF projected a 3.3% at the beginning of the year, we were very skeptical because we knew that perhaps what informed the IMF projection then was the fact that we had a massive improvement in crude oil production in Canada to about 1.64 million barrels per day. But from our own perspective at AfroInvest, we're able to establish the fact that factors that can keep that oil production at that level were not put in place. I mean, we still have our oil asset being guarded by non-state actors. And again, so until we have measures that will reflect the readiness of the government to secure oil assets, such that no drop of oil, and every day we continue to hear that almost half of what we produce is being stolen. If you look at oil price globally since 2022, it should have been a favorable one for us. Our budget this year is benchmark at $72 or so. Even with the current pressure on oil, it's still at $75. So Nigeria should have been building its excess crude oil reserve, not depleting it. Now we have actually depleted something that was some years back in the region of
and it looks like, and it seems like nothing is
we need to fix.
It seems like nothing is being paid into the excess crude account, from all indications.
Because we don't have
point.
anything excess. We don't have what should go to the account is excess above budget. So, for instance, if the oil is benchmarked at $72 per barrel, and the projection is that at $72 per barrel, we also produce currently this year now our oil benchmark is $1.78 million barrel per day, which is what is in the budget. So assuming we are producing that baseline and oil is trading at $72, whatever comes in will go into the federation account for sharing. But the moment oil price inch high by $1 or 1 cent, excess of it will go to the excess crude account. Or in another way, even if oil is at $72 and we are producing more than 1.78 million barrels per day, so either volume goes up or price goes up, whatever is above the budget level should then be going to the excess crude account. But over the last 7-8 years, we have not even met our budget benchmark for crude oil. The best we have done for crude oil in the last 7-8 years was very close to 2 million barrels per day, which largely is not, I think that should be around 2018. So which largely is not sufficient. And around that time, we're even close to 2 million barrels per day. Oil was trading very low, below $60. So by and large, this whole forecast by IMF is just the IMF now aligning to what some local investment banks or research entities like AfroInvest have actually put forward that, yes, we can get it right, but the structure to get it right, the political will to get it right, the institutions to drive reform appropriately. We have countries that go through reform. In fact, there is no country that will thrive on sustainable basis without putting things in proper shape, without having a reform, without having an institution running. But until we have those fixed, we will just be having a short-term relief, which might not last us for long.
But Damilare, looking at what's happening with fuel prices, what's happening with inflation, food inflation, and most of the cost of living crisis, it's safe to say that we shouldn't have floated the naira at all.
Well, I mean, you can argue for both sides of the subject, right? Like I said, the idea of floating, is it bad? Looking at what has happened to us. I mean, the reality is that the last 8 years, or the 8 years that came before this administration, Nigeria largely lived a fake life. Fake life in the sense that we borrowed, we depleted our reserves to keep the naira at the level it was. What should have been done those periods was to ramp up our productivity. The reality is that for any country with deficient productivity, or for any country that is not producing at least to a level of break-even point. For instance, I'll give example of certain commodities. Let me use rice for example. Data suggests that Nigerians consume almost 30 million metric tons of rice. But what we produce locally, even with Anchor Boro and all the other initiatives, is half of that. So that means we import half. And that half you are importing, you are depleting your reserves, you are making more people not to get jobs. So in the 8 years before this administration, we were depleting our reserves to defend things that we should have put our house in order to do. So yes, this administration coming with the agenda of reform is very good. But again, the reform itself was then implemented, right, partly not very efficiently. And that is why we are here. For instance, it will be very difficult for anybody to argue that the government should continue to pay subsidy. I mean, in the last 4 years before this administration came, at least for the official data, we spent more than 7 trillion on subsidy. That could have pushed education budgets up by twofold. That could have helped the health sector. But the reality is that because we don't have the institution to even ensure that these reforms are driven properly. So if we remove subsidy on fuel, the gains or the value, the revenue that have been accrued from removing that subsidy, how is it being used? So we're removing subsidy that is fairly benefiting all, and the gain, so to say, is not crystallizing for all to enjoy, because it appears the gain or the savings are going to personal pocket. So these are the things that are wrong now that is making the reform to look as if it's a wrong step. But the reality is that it's not a wrong step, because we can't continue to live a fake life.
Yeah, no fake life. Yeah, but looking at this projection from the IMF now, what do you think can be done in the short term to turn this tide, from this forecast?
So whenever a forecast like this comes out, it should be a wake-up call for any serious nation to do things to beat it. It's not cast in stone, right? At the beginning of the year, I said IMF forecasted 3.3% growth. They reviewed it downward in April. Now they are reviewing it downward. Why? They are beginning to see lacunas in some of the things we need to do. So we can actually beat this projection, even though we have just about 2.5 months to end the year. If some measures are put in place, for instance, one of the factors cited by the IMF for them to have revised down this growth outlook is the fact that our oil production has been dismal. The question is, if the government begin to show the correct political will to secure Nigerian oil assets and prevent large-scale theft that is ongoing both by, in quote, state and non-state actor, we can begin to see our production level hitting 1.6 million barrels per day at least from end of this month, and the remaining 3 months, it will impact. The reason why we're able to grow about 3.2% in Q1 is because oil sector grew significantly, and that, in fact, that was the quarter that the oil sector ended 13th consecutive quarterly contraction. So there are things that we can begin to do now that will impact the economy. The second thing they flagged is that our agri productivity is beginning to, and nobody should tell us that. Everybody is a living witness of that. The price you get in market changes every day, and it's to the upside. And they highlighted factors like the fact that flooding is affecting it, and also insecurity. We have been shouting insecurity in the agrarian community for years. The political will to end that has not been fully implemented. And we are now having issues of flooding. The last flooding we had in Maiduguri could have been prevented if the right step has been taken, because the dam that busted and escalated that flooding had actually been marked or been confirmed to need a sort of engineering work. But we didn't take the right action. So what I'm saying is that IMF can project, AfriInvest can project, any entity can project based on current variables and expectation. But if the right steps are taken, projection can be swayed. And that's why when you see most analysts forecasting, they tell you this is what happened in a base case, this is what happened in a best case, this is what happened in a worst case. And that's why even for the FX rate, you recall that JP Morgan said by the end of the year, FX should be about 1,200. But there are conditions to having that level. We do not do what ought to be done to achieve that level. And where are we now? 1,006 level. If we are not careful, if we continue to fritter the little we're earning, if fiscal prudence is not implemented, if policy that will help to ensure that local productivity is improved upon is not checked, the pressure will remain. Because why? The more you are not producing locally and you need to import more, the more the pressure on your reserve, and the more the pressure on your currency. Foreign investors' appetite, for instance, in terms of capital importation, are beginning to diminish. What we saw in the last quarter, yes, at about $2.2 billion. But when you look at the structure, FDI is not coming very strong. FPI too is weakening. The only component that is increasing is the borrowing. So meaning that foreign investors are only willing to borrow Nigerian money and not to come in here. And that is not very encouraging.
Definitely, that doesn't look
at a high cost.
Right.
So by and large, we can reshape our story. We can put Nigeria on the track that will beat IMF forecast. We have in the past, Nigeria economy has done far better than IMF forecast.
Okay.
But the box lie on our desk to do things right, to get things right.
I guess our operation beats the forecast at this point. But what are you seeing? Is this going to, shape investor sentiment in the market? Is this bearish, for the market, or maybe the market might just be indifferent?
Well, I don't think that the IMF revised projection will affect the market. Like I said, someone like Afro Invest at the beginning of the year have already been projecting 3%, and we gave our reason in most of our reports. So IMF is just coming to terms with what some of us have seen. Secondly, if you look at the dynamics of the market, right? For instance, let me give an example of year 2020, when COVID struck, the global economy contracted 3.5%, Nigeria economy contracted about 1.93% or so. That was the year Nigeria exchange emerged as the global best performing exchange, according to Bloomberg, with a return of 50%. What happened that year? Because of the pandemic and what have you, a lot of asset prices, fell drastically. For instance, a ticker like GT Bank stocks then fell to as low as 11 naira. So people came in and took advantage. Seplat was trading around 300 and something, Airtel around 400. So people came in. Now, looking at what is ahead of us, I don't think the IMF projection will really affect market. The IMF projection will only affect Nigerians and the citizens, because if the economy is not growing fast, if agri productivity is not growing fast, it is the citizens that will suffer, not really in the market. Because if you look at the market dynamics now, you look at the sector that are thriving. You look at the oil and gas. Like I mentioned, the oil and gas has been the best performing sector on the NGX, doing more than 118% year to date. What has helped the oil and gas is that some of the players in that space, especially those in the upstream, right, they are expanding their production. And at the same time, because oil is priced in dollar, so whenever they sell in dollar. The more the pressure on your naira, the more their return. And for those in the banking sector too, aside for the concern around recapitalization that hits them in Q2, you've seen that sector too coming up gradually, because these are sectors that are managing to sweat out their assets. Then if you then add that to fresh listing, last week we had another listing, adding about 3 trillion to the market. So by and large, some of the sectors that you think are very strong to drive the market are still have what I would describe as exogenous catalysts to shape them. So oil and gas, because of high energy price in the global market, the banking sector, because they can always push whatever pressure that is coming to them. So by and large, the market might likely deviate from whether we call the IMF projection a bearish one or not. The market will actually still keep to this is positive trajectory. I don't see the equities market closing this year below 33%, which means that the market might be breaking even with inflation, because inflation too currently is at about 33%. And even with the current dynamic, we don't see it falling below 31% by itself, which then means the average for the year will be about 33%. So by and large, the market might likely break even with inflation dynamics. And we think that there won't be any major sell-off, because the sectoral performance is already reflecting that. Those sectors that are heavily hit by FX and some of the inflationary dynamics, you are seeing their performance too not very buoyant, like the consumer goods part, like the brewery sector. Those that are heavily exposed to FX and that are slightly discretionary good. You are seeing the effect. So market have priced all this in, and we don't see any major change because of the IMF projection.
Right, and definitely we'll see if the all-share index can outperform inflation. But thank you so much, Damilare Shimi. It was great having your perspective today. Thank you so much.
Thank you for having me this afternoon.
All right, let's get a check on U.S. Futures. Now, we see it fell after the S&P 500 posted its first back-to-back loss since early September. So red, again, is a color just like this same time, yesterday, 0.31%, the Dow Jones Industrial Average. And the S&P Futures, that's marginally down 0.06%. The tech-heavy Nasdaq down 0.14% at 20,513 points. In after-hours action, McDonald's fell nearly 6%. The U.S. Center for Disease Control and Prevention said an E. coli outbreak tied the fast food giant's quarter-pounder burgers resulted in 10 hospitalizations and 1 death. And we saw Starbucks, that tumbled about 4% after the coffee chain issued preliminary quarterly results showing that its sales fell again. Let's look at what's happening Let's see what happened with Asia there. But for Middle East, 0.03%. Dubai, for the Abu Dhabi index, 9,224 points, 0.24%. Saudi Arabia, down 0.68%. Big drop there. Qatari index, also down 0.63%. Let's take a look at Asia now. We see the Nikkei, 0.8%. 8% down. Kospi up 1.12%. Big moves there for the Hang Seng Index, 20,784 points, 1.39%. Other markets we track in Asia, we see the Shanghai Composite 0.52%, Nifty 50 0.29%. So it's largely a green picture. That's what we're seeing right there in Asia. All right, let's